And taking a look at the hog markets now, USDA's quarterly hogs and pigs report tallied nearly 75 million head on March 1st. That's down 2% from a year ago and down 3% from last quarter's report. Nebraska's inventory was down 3% from a year ago to 3.6 million head. I spoke with Iowa State Extension Livestock Economist Schulz earlier this week and started by asking his thoughts on the USDA estimates.
So very bullish report. I think it came obviously as a bit of a surprise. I think we've seen some surprises the last couple of quarters. That was very much coronavirus pandemic related. But given where the fundamentals were, I think there was expectations that we would see larger inventories. Certainly that's where the pre-report expectations were at. The fact we came in below year ago levels, we came in below quarter ago levels, and even at lower than most of those pre-report expectation ranges really gave it that bullish tone.
Lee, put that into perspective for us in terms of what that means for producers, because the USDA has shown lots of growth in past pork reports.
Well, I think first it's important to put them in a bit of a context. So this is still the second largest March 1 hog and pigs inventory that we've seen. So I like to think of this as maybe just a little bit of a reprieve in that growth that we've seen. I think it's too premature to say that we're seeing some contraction in the industry. Now, obviously, we've dealt with a lot of tumultuous situation here the last 12 months or so that I think is contributing to where these inventory levels are at.
Yeah, that leads into my next question. Is this mainly due to COVID-19 or is it something else?
Several factors. And I think first, we got to realize that biology dictates these inventories. And so it's roughly pork produced today, those decisions 10 months ago are dictating that. Well, if I go back 10 months from March 1 of 2021, that's May 1 of 2020. That's arguably really at the height of the pandemic disruptions. And so that certainly contributed to these smaller inventories that we're seeing today. But there's several other, I think, related factors. For example, wage rates have really increased here. They've continued that 4% growth annually. And you could argue in the last year, they've even increased more. Fuel costs, while they've been down, diesel fuel, gasoline, propane costs have been up. It's contributing to some of that increase. And then I think just some of the issues with the pandemic, I think they changed that risk-reward relationship that producers potentially need to increase inventories.
And what about PRRS? Is that a contributing issue?
Well, we've certainly heard a lot of chatter about it. I think that is contributing to the smaller pig crop, for example. So if PRRS typically ramps up October to March, well, if you look at that December, February pig safe per litter, that average was down 5% compared to the prior year. Well, December was down 1.4%, January was down 0.4%, and then you see, and actually February was up 0.5%. And so I think, yes, we've kind of seen that new strain of PRRS that's been talked about hit, as well as the other strains have contributed to that. But also, I think it's very localized. As you've seen in the top 16 producing hog states, you've seen some up, you've seen some down. And so I think, again, that is a bit localized in the impact of PRRS, at least from a year-over-year standpoint.
Lee, any guesses as to how long these tighter supplies could last?
One indication, I think, is looking at the farrowing intention numbers. And at face value is a little bit conservative, but I want to dig in especially to that June-August one. We're comparing to a very large level last year. So anytime you compare to a very large level, that's going to show maybe a larger decline than you would expect at face value. Also, out of the last 10 June-August quarters, only once has the final farrowing number came in below what the first intentions were. So what does that mean? Usually those ramp up as we get closer to that time period. And so that's somewhat what I would expect and maybe see a little bit larger sow farrowing numbers. But what does it mean? overall, I think we expect less production than we did coming into the report, as the numbers suggest, maybe at levels par to a year ago, which is less than what we had expected coming into this year.
Okay, let's look into the Lee Schulz crystal ball and have you give us a price forecast, maybe quarter by quarter for the rest of 2021.
Well, and I'll highlight it is a broken crystal ball. And so I'm going to forecast the Iowa, Minnesota producer sold all purchase arrangements hog price for the first quarter. We've seen that average about $76 per hundredweight on a carcass basis. For the second quarter, I'm 98 to 102. The third quarter would be 90 to 94, and then the fourth quarter would be 74 to 78. That'd give us an average of about $86 per hundredweight. That's over a 40% increase from last year, and about almost a 30% increase from 2019.